There's new stock exchanges coming, folks. Three of them in the month of September. That's a fairly rare event. The question is, do we really need them? But the one we're talking about today is a very different one here. Three new exchanges, as I mentioned, but the long-term stock exchange started trading yesterday, and they're pledged to support companies who share a long-term interest in sustainability, inclusion, and diversity, and treating employees fairly. Sound familiar? Those are ESG concepts. The CEO, Eric Ries, is joining us to discuss this exploding interest. You know, Eric, we do, welcome to ETF Edge. We talk about ESG all the time. When I read about the long-term stock exchange a couple months ago, I said, darn, this is an ESG exchange. Is that a fair characterization of what you're looking for? What are you trying to do with the long-term stock exchange?
Well, there's no question that ESG is the hottest category in the markets. I mean, what is it, $20 billion have flowed into ESG funds this year. And yes, we think that ESG, we think of it as kind of as a subset of focusing long-term. So when you're focusing on outcomes like resiliency and having a stakeholder approach, that's really increasingly what shareholders in society demand. And what we want to do is focus companies on that long-term horizon so that things like sustainability, good governance, treating employees fairly, operating in a 21st century way in the communities where companies operate, that becomes a natural side effect or consequence of that philosophy of long-term thinking.
And what amazes me is you really sort of walk the walk. I was looking at your board the other day, 80% women on it, all eminently qualified, the top people in the field. I guess the question is this the right time to do it? This seems like a hard sell. I mean, everyone buys into, we see the oceans of money going to ESG. People are buying into the concept, but can you build an exchange around it? Now, initially, we had a conversation a couple days ago. You explained to me you're going to go after private companies that are seeking to go public initially to list on the exchange, but you're also, in the future, interested in current companies that are listing on the NYSE or the NASDAQ, for example. Do you believe you could successfully get, I don't pick a company, a Procter & Gamble, I'm just picking one out, to change based on the idea that you have a higher listing standard? Would companies be receptive to that argument? Has ESG advanced that far that you think you could succeed in doing that?
This will be the acid test of all these pledges and commitments. I think it's one thing to sign a letter. It's one thing to put lofty rhetoric in a press release or a financial statement. But the question is, what have companies really committed to? So if you look at it from the investor's point of view, a lot of ESG investing is about finding the least bad company in each category and investing in that. Nothing wrong with that. But how are we going to get net new ESG qualifying companies? How do we influence the mind share of the next generation of managers so that they view this as a source of competitive advantage? Now, part of that is on investors to support the companies that are taking these bold stands to make sure, the evidence is very clear that having long-term investors on your cap table is a source of strategic advantage and leads to outperformance of any company stock. So if investors and managers are partnered together to produce these outcomes, I think that is the path forward for our society. And listen, that's what stock exchanges at least used to be all about, bringing investors and companies together for mutual benefit.
Bob, I have a great
I don't think anyone would disagree.
Yeah, Eric,
go ahead, Andrew.
Right, if I can jump in for a second. So there are fewer and fewer companies that are moving from private to public these days. We know that, and when they do go public, there's a lot of pressure on. And there are a lot of business decisions to be made. Can you make a case for having this thematic platform, but also offering similar or even better economics, technology, listing benefits that a company in going public that would be ESG oriented would want to choose your exchange?
I really appreciate that question because I don't get to talk about this very often. I'm a technologist by background. That's my training. And LTSE is first and foremost a software company. So this is not just a legal innovation, a technical, legal listing standards innovation, although those elements are very important. It is also a software platform. And we do think that there are opportunities for technology to improve the engagement and relationship between companies and their long-term investors. We're a big believer that companies need to have transparency into who their long-term investors are. And we think that long-term investors ought to get privileged capital raising opportunities from companies whenever possible. So, I don't know that in the early days of this, we'll ever get to a point where long-term investors, buy stock at a lower price than speculators. I think that, that's a dream one day that we could start to differentiate between the tourists who are just passing through and the citizens of the republic who intend to stay. But I think there are a lot of ways to create true mutual win-win beneficial partnerships between genuinely long-term investors and the managers that want to engage with them.
Yeah,
and how do you feel about the? Go ahead, Andrew. You want to make a point?
I can make you feel good about that point. I was going to say, because I'm going to tell you, under the hood of the ETF industry, since we're looking at that, your point is true. I mean, a lot of the push is like, wow, Robinhood, everyone younger wants to be involved in this. But I can tell you, I was on the phone with one of the largest ETF strategists this morning, Horizon Investments. They make it part of their core strategies, right? And they view it as a factor. And a factor to them is a subset of securities that investors value higher. And they're already at Gen 2. So they're not simply putting the ideas into their portfolios. They're already doing risk mitigation into that. So what that tells you is if you're doing risk mitigation, that means you're holding on to this investment for a long time. When you get these big strategists who can raise a lot of money and stay long-term and have a great reputation like Horizon does, then you're going to have sustainability. And that is already happening. Not that the Robinhood investors don't drive money. They certainly do. But I will tell you that it's already happening with the strategist community in ETFs.
100%.
How do you feel?
And the other thing I think is interesting is
Eric,
this next generation of companies. They don't. A lot of them, they've been very focused on growth, on technology, on building a brand. They have not necessarily started to engage with these issues in the broad way that investors might assume, given their size and sophistication. So there's a genuine opportunity here to win over hearts and minds and to change the governing philosophy of the next generation of companies, and that's the ballgame.